Over the last month or so, crude oil has rallied by more than 20%. What's happening? Well, the thing is, it simply has started a rallying phase of its new cycle. So let's talk about crude oil cycles, delete this crude red arrow, and zooming out a little bit, at least since the middle of 2017 and beyond as well. These crude oil cycles usually last for around a half a year. The average since the mid of 2017 is 160 days. But of course, sometimes these cycles do stretch or shorten. The last couple of cycles lasted for 175 and for only 100 days. We see a bit of a positive divergence at the end of the previous cycle on the price versus RSI and a push higher into a new cycle. Our portfolio at myfinancesteacher.org has done particularly well with our energy investments. We have a category over here where we talk about natural gas, crude oil, and even uranium. And we currently still hold a relatively large allocation to energy, although I've trimmed just a tiny bit off of that allocation as crude oil is getting only temporarily somewhat perhaps overheated, with the 14-day RSI as approaching that overbought levels. It's poked at the level of 70 a few days ago and it's now just around 69.8, so very near that overbought level. And we have some of the previous highs that's around the level of $83 to $84 on crude oil that might provide some sort of a resistance. Again, I would only expect this resistance to work in the shorter term, as the intermediate cycle on crude oil is still relatively young at only 35 days. And as I've just mentioned, these cycles usually last for nearly half a year, so we probably have at least one more month or perhaps even longer before we see the top of the ongoing crude oil cycle. But again, temporarily, I wouldn't be surprised to see a bit of a retest of this 200-day moving average. Moving on to crude oil market optimism, we see that over the last 5 or 6 weeks, the optics has jumped all the way from 30 to above 50. It's at 52 right now. As for the cycle lows, well, all through 2021 and the first half of 2022, the cycle lows came with this optimism index not far below the level of 50. After that, though, with the sales from the Strategic Petroleum Reserve, a few cycle lows came with this optimism index well below 40 and even close to 30. And yes, market sentiment has improved quite a lot already, but I don't think we are topping yet, again, as the cycle is relatively young. Perhaps there might be some correction in the shorter term, but I do still expect another push higher, both in prices and market sentiment, if not to the level of 60, at least somewhat modestly higher optimism and excitement on the market before we start the declining phase of this cycle. And these expectations also align with seasonality. The top chart is seasonality since the beginning of this bull market in commodities, since the beginning of 2016. We see that crude oil usually pushes higher anywhere from the beginning of August, sometimes with dips, of course, in the beginning of September as well. Generally, while there will be dips on the way, the seasonality suggests that demand for crude oil and crude oil prices usually rise into October, which aligns with our view of crude oil cycles. And as 2020 has been an extremely unusual year, excluding 2020 with its pandemic low, we see that the seasonality picture changes mostly in March and April, where the decline in crude oil price isn't as severe. But looking at seasonality over the next couple of months, the picture doesn't change significantly. Yes, there are corrections on the way, but the trend is generally higher into October or even early November. So that's my view on energy in this short format of a 5-minute video. For much more details, including our extremely informative uranium reports, join us at myfinancesteacher.org. Have a wonderful Wednesday. Bye-bye.